In this video, we're going to go over and I'm going to show you exactly how just $14 per day, yes, just $14 every single day into a high quality dividend growth ETF like VOO, the Vanguard S&P 500 ETF, is not only going to be more than enough when it comes to retirement, but also it's going to leave you with, at least theoretically leave you with, a lot more money than the average retiree has. So I recommend if you're interested in long-term dividend growth investing and you want to see exactly how this math works out, to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So before anything else, let's lay down some groundwork. Let's look into what the average person actually has when it comes time to retirement, just to see exactly how much money we're sort of trying to hit, or in this video's case, we're trying to blast through. So it says right here, what are the average and median retirement savings? It says the average retirement savings for all families is $333,940 according to a 2022 survey. Now, the median retirement for savings of all families is around $87,000. Now, for this video's sake, let's just say that the average retirement for families is around $350K. So in theory, if just $14 a day into a high quality dividend growth ETF is all it's going to take to not only make it to that point, but like I said, blast past it, theoretically speaking, that'd be an amazing opportunity. Now, the specific strategy that we're talking about for this video is investing the $14 per day into the VOO ETF, one of the most popular low-cost index funds across the entire market, and this is for several good reasons. Now, VOO, for one, is very cheap to hold on to. Its 0.03% expense ratio means it's one of the cheapest ETFs, if not the cheapest ETF across the entire market. Now, VOO's product summary is pretty simple. It says it invests into stocks in the S&P 500 index, representing 500 of the largest U.S. companies. The goal is to closely track the index's return, which is considered a gauge of overall U.S. stock returns. And the great thing about VOO, the Vanguard S&P 500 ETF, is that not only is this ETF extremely diversified with 500 of the best companies more or less across the entire world, but on top of that, this ETF has massive price return potential, or at least it has historically, which I'm going to show you in a second, but also on top of that, this ETF pays a dividend and has been increasing the dividend payouts over time. Now, to give you more of an idea of what VOO has actually done historically, since around 2010, this ETF is up around 389%, which is insane. Believe it or not, back in the day, VOO was trading at around $100 per share, which as of recently now nearly $500 per share, which means an investor around 14 years ago that bought VOO would have about 5x their return just as far as price return goes. Not to mention, basically any time historically that you purchased VOO, as long as you held onto it for maybe 6 or so months, this ETF has been going up and up in price for the most part year after year after year. Now, the top holdings in VOO are, of course, the S&P 500, so you are going to get a large exposure to things like technology, financials, healthcare, consumer cyclical, and smaller exposure to things like communications, industrials, consumer defensive, etc. Now, if you're interested in having exposure to some of the higher beta names like the top 10 in VOO's list, then this ETF could be good for you. We're talking names like Microsoft, Nvidia, we're talking about Apple, Amazon, Meta, Alphabet. These are some of the biggest companies and most profitable companies across the entire world. But like I mentioned, although VOO has went up in price significantly over time, this ETF also does offer a dividend. It's around 1.35% trailing 12-month dividend yield, which isn't necessarily massive, but with around 6.7% dividend growth rate on the last year, around 7.7 or 7.8% in the last 3 years, and around 4.4 in the 5. But on the long term, VOO has raised their dividend around 7% more or less every single year over the last 10 or so years, which means this ETF, although isn't necessarily a dividend-focused ETF, it still has paid investors more and more cash flow over time, which is going to be very helpful, especially when extrapolating out and seeing what this ETF could do for a retirement portfolio long into the future. But like the title of the video says, I said that just a $14 per day investment into VOO, or even possibly less, could potentially put you in a situation to where you not only have enough money when it comes time to retire, but specifically you could end up with potentially at least a lot more money than the average. So if we were to build out a situation right here on the Dividend Calculator with a $10,000 starting principal, of course you could start with less or more, with a $5,110 contribution every single year, because that's $14 per day, a 1.35% initial annual dividend yield, a 7.25% expected annual dividend amount increase, 7% expected annual share price appreciation per year. Again, all these numbers could be bigger, could be smaller. We're just going off some estimations. We are going to be reinvesting the dividends the entire way, so keep that in mind. The distribution frequency is quarterly, so let's see what a $10,000 starting investment and $14 per day into VOO could lead an investor to long term. Now, I think it also goes without saying that this is for an investor that has 30 years to invest. So this might not be a good situation if you're, as of right now, 70 or 80 years old, of course, but for relatively younger investors, which is most of you guys watching this video, this could potentially be a good option. A $10,000 investment in VOO is going to pay around $135 per year in dividends, but skipping right ahead 5 years down the road, $36,000 of principal, and you're already getting paid around $500 per year in dividends. Now, 10 years down the line, this portfolio, if you just kept buying VOO, kept reinvesting the dividends, etc., would already be up to around $84,000, $85,000 in principal and around $1,100 per year in dividends. So just 10 years down the road, not necessarily saying that $84,000 is enough to retire off of, but even that fast, this portfolio is compounding like crazy because of the fact that VOO keeps growing over time and because of the fact that this ETF has paid more and more in dividends over time. Now, 15 years down the road, let's say you started off when you were 20, you'd be 35 at this point, you'd already be basically halfway there to the average retirement amount, $155,000 and around $2,000, $2,100 per year in dividends. 20 years down the road, you surpass $250,000 of investment value and around $3,700 per year in dividends. Now, all the way at the bottom, just going off of the numbers that we use specifically, an investor could potentially have an ending balance after 30 years of around $656,000 and around $9,500 on top of that in dividends. Now, just going off of the averages, that's a lot more than a lot of people have when it comes time to retirement. And it's not like you really bent over backwards or really did anything all that crazy to achieve this goal. You literally started with $10,000, which again, you could start with less or more. I'll even show you an example of this, and you added $14 per day, which is basically what it cost to go out to breakfast at this point. $14 per day or $5,100 per year, more or less, is what turned a portfolio and what compounded a portfolio from just $10,000 into $707,000, which again might or might not be enough to retire off of, depending on what your situation is, but it 100% is more than what the average person has. Now, what's crazy is that maybe you're saying, well, I don't have $10,000 to start off with. Maybe if you only had $5,000 to start off with, a $5,000 principal and still a $14 per day budget for VOO would still leave an investor with the end after drip value of $606,000, which is still potentially more than enough to retire off of, depending on your expenses, etc. Now, I could go through multiple different situations and sort of extrapolate out, but I recommend you guys mess around with some of these online free dividend calculators and mess around with some of your own numbers and your own situations to get an idea of what things look like for you when it comes time to retirement. But more or less, I just want to make a point that once again, like I love sharing on my channel, it doesn't necessarily take thousands or millions of dollars to long-term build a portfolio that not only is going to allow you to retire, but even potentially allow you to retire early, a lot further ahead of a lot of other people out there. Not to mention, if you up the annual contribution up a little bit more, instead of $14 per day, up to $18 per day, or maybe even $20 per day, 7 days a week, so $140 per week. Just imagine how much bigger this portfolio long-term could potentially grow. So now that we looked into the average retirement savings, we talked about how much the average person has when it comes time to retirement, and I shared with you exactly how just a $14 per day investment into something like VOO or an ETF with these same exact metrics could potentially allow you to retire with much, much more than the average. I lastly, most importantly, want to hear from you guys down below. As of right now, whether it's ETFs or stocks, what are some of the main foundational positions or assets you're building as of right now to use later on for retirement? Drop the ticker symbols in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.